The oil to gold ratio has collapsed to 0.5 grams of gold per barrel. This is the lowest level in modern financial history. Lower than the 1970s oil shocks. Lower than the global financial crisis. And lower than the COVID panic. This is not noise. This is not a curiosity. This is macro warning flare. What this means is whenever this ratio breaks down like this, it is not that oil that is sending the message, it is gold. And gold is telling you something deeply uncomfortable about the global financial system. The oil to gold ratio measures how many grams of gold it takes to buy 1 barrel of oil. When the ratio is high, energy is expensive relative to money. When the ratio is low, money is expensive relative to energy. Historically, this ratio mean reverse, meaning it goes back to the average, right? But today, it has broken through every historical floor. Gold hasn't merely risen, it has reasserted itself as money. Money, not paper money, gold money, hard assets. Oil hasn't merely fallen, it has been financialized into irrelevance. That combination only happens during periods of systematic stress. The systemic stress. Look at the chart. When did we get to those levels? Well, in the 70s, the 90s, 70s, well, we know what happened there, right? And then, which was basically the oil crisis. Then we have the situation in the 90s, the Gulf War, right? Then we have the Asian financial crisis. Look at all the bottoms. The oil prices decline. Then we have to 2010, 2020, 2024 because of COVID. And now we're here. But we're at the lowest level. We're at the lowest level we have been in quite some time. Look at it. Look at the detail of the chart. Look at the events that are tied to it. And basically what you're seeing is a situation that is going to be very complicated very soon. Right? So what do we want to talk about? Well, basically, gold hasn't merely risen, it has reasserted itself as money. Oil hasn't merely fallen, it has been financialized into irrelevance. Even major spike or collapse of this chart coincides with monetary regime shifts. In 1971, there was the Bretton Woods collapse. Gold decouples from the dollar. The ratio destabilizes. In 1973, Arab oil embargo. Energy weaponized. The ratio explodes upward. In 1979, Iranian revolution, inflation spirals, gold dominates. And in 2008, we have the global financial crisis and credit freezes. Gold surges relative to everything that is real. And in 2020, we have the pandemic shock. Oil collapses to near zero. Gold holds. And now we are seeing something worse. Gold is rising without an oil shock. Oil is cheap without a global depression. This tells you the problem is not supply and demand. The problem is trust. Why is this time different? This time, the collapse is being driven by 3 forces simultaneously. 1, monetary debasement. That's right. They know the dollar is getting devalued. First, monetary debasement. The governments are issuing debt at a scale that dwarfs wartime levels during the so-called peace. 2, structural energy dominance. Shell efficiency gains and demand fragility have capped oil pricing power. 3rd, financial repression. Real rates remain negative or barely positive, forcing capital into hard stores of value. That's the thing with gold. Gold is not rising because it is loved. Gold is rising because nothing else is trusted. This ratio is not telling you oil is cheap. It is telling you money is broken. Many investors misread this. They say, oh, oil is dead. Oh, energy doesn't matter anymore. That is dangerously wrong. Energy is the foundation of all economic activity. What has changed is who captures the surplus. Oil has been capped by over-financialization, policy intervention, ESG capital constraint, and demand volatility. Gold has no such ceiling. Gold does not depend on growth. Gold does not depend on policy approval. Gold does not default. You see why people are going for gold? Both are natural resources. But when oil collapses against gold, it means productive assets are losing ground to monetary assets. This is a late cycle behavior. Basically, markets are really pricing the following. Persistent inflation volatility. Again, we believe that inflation is going to remain. Rising sovereign debt risk. That's true. Currency dilution. Lower real growth. Political interference in markets. I mean, come on. They're all over the place. Not just in these countries, but in Europe and everywhere. This is not a bet on recession. This is not a bet on financial disorder. This oil to gold ratio is effectively saying the following. I would rather own something no one can print than something that depends on stable global demand. Because obviously oil is tied to, consumption. This is not optimism. That is survival instinct. Historically, ratios like this do not stay at extremes. Resolution happens one of three ways. Number one, oil prices surges violently. 2, gold corrects sharply. And 3, the currency denominator collapses. That is the issue that you need to worry about. If oil rises to restore balance, inflation returns with force. If gold falls, confidence must return, and it hasn't. This suggests monetary instability is persisting. So one final warning on this. This chart is not about oil. This chart is not about gold. It is about the pricing of trust. When gold buys more energy than ever before, it means the system is hedging against itself. Ignore this ratio at your own risk, because every time it has screamed like this in the past, something in the financial world eventually broke. And it never broke where people expected.